Hi everyone, welcome to today's webinar, Streamlining Foreign Offshore Procedure, aka just streamlining or SFOP, with the focus on stimulus payments. I know we're still talking about them, but I'll tell you why that's very important in this webinar. So, as we go into it, I'm sure you're going to have a lot of questions, and of course we're going to have a live Q&A at the end of this webinar. Just keep in mind, it's possible that we don't get to all of the questions. So if we don't get to your questions or you don't want to raise it in a public forum like this, you can always go onto, our Facebook page, MyExpatTaxes, where you can post anonymously all of, your different tax questions, and we are there for you as well. You can also email us at team@myexpattaxes.com. So basically, if you have questions, save them for the end, and if we don't get to them, there are different ways to ask those questions afterwards. So my name is Nathalie Goldstein. You probably already know me at this point, but if not, I'm the CEO of MyExpatTaxes. I'm also an IRS enrolled agent. And more importantly, I'm just like you. I moved abroad in 2015, where I was completely shocked that I had to still file US expat taxes. And I had tried to go to, expat firms. I tried to use TurboTax and, all those US tax softwares, and they just were not really made for US expats. And so that's why we came to create myexpattaxes.com, the leading tax software for US expats. So with that being said, let's get on with today's agenda. Today we'll talk about, what do you even have to do for your US taxes as an American living abroad or as a US green card holder living abroad? How do you catch up with your taxes in case, you haven't filed in a long time? And what is FBAR? What is FATCA? What are with all these acronyms? Why is that important to you? And of course, because we are in a new tax year, what are relevant tax information that you need to know for 2024 doing your 2023 tax returns for the US? So, why do you even have to file a US tax return? That's probably the most common question. And unfortunately, the answer lies with the fact that you are a US citizen or you have a US green card. Now, I want to call out, because this gets missed a lot. If you have a green card and you never formally gave it up with Form I-407, but you just left the US or you just let your green card lapse and expire, that doesn't mean you're off the hook. You're still technically a US tax resident. So again, US citizens and US green card holders, you need to file your US taxes because you are seen as a US tax resident even if you do not reside in the US. If you don't believe me, well, for you US citizens, check the back of your passport. As you see on this slide, there is something in there that says, wherever you go with this passport, don't forget about me. You got to file your US taxes, signed the IRS, right? So I'm sorry to be the bearer of bad news. However, yes, you need to file a US tax return if you're a US citizen, US green card holder, and your worldwide income passes the filing threshold. So you can see the filing thresholds for your 2023 tax return on the screen, right? I'm not going to repeat them. Basically, they increase every single year based on inflation. So keep in mind, the filing thresholds for prior years are going to be slightly less than this. I do want to call out two things. That if you are married filing separately, so if you're married to a non-US citizen and you do not want to put your non-US citizen on your US tax return, because honestly, why would you? You're probably under, like I said, married filing separately, and your filing threshold is only $5. It's been $5 since 2018, and it doesn't look like it's going to change. So if you have foreign bank interest income that totals over $5 as married filing separately, you got to file a US tax return. I know, I'm sorry. If you're self-employed, even if that's not your main job, if you just have some freelancing income on the side, you have over $400 in net profit, you got to file a tax return, even if you don't meet the filing threshold otherwise. And that's because the US wants to see if they will basically charge self-employment tax on your net profit. So a lot of folks, basically, if you are living abroad and you earn some type of income, you're probably filing a US tax return. Now, again, we're talking about worldwide income. So you're not just looking at your US income, but worldwide. So foreign salary, foreign pension, US investment income, foreign investment income, foreign rental, US rental. Every single dollar, pound, euro of income you earn is subject to US taxation. Whether or not you actually pay taxes is a different story, and we'll get into it, but it is subject to US taxation. Now, another question we get is, how old do you have to be to start filing a US tax return? Again, it's not about age necessarily. While there are a few factors that change based on age. So if you're 65 or over, your filing thresholds are slightly bigger, except married filing separately. That's always $5. And if you are a child, right, if you have unearned and earned incomes, aka you have a lot of investment income because your parents have, set up brokerage accounts or something for you, there might be different filing thresholds. But in general, for most US taxpayers, you're looking at the filing thresholds on the screen. So with that being said, now you know that you probably have to file a US tax return. When do you actually have to file it, submit it, pay taxes? So this is also confusing for US expats because honestly, nothing is that simple if you are a US taxpayer from abroad. So first deadline, most important deadline that is coming up very shortly if you are joining this live webinar is April 15th, 2024. That is the deadline to pay US taxes if you owe them for everyone, no matter where you live. So if you think you owe US taxes because you have a lot of US source income or you have a lot of income that you don't pay a lot of foreign taxes on, you should be looking to file by April 15th. Because if you owe taxes, you got to pay by that deadline to avoid interest and penalties. Now, if you don't owe any US taxes, right, you can wait until June 17th to file. And that's because if you are a US taxpayer that's living abroad on April 15th, you have a 2-month automatic extension to file your tax return. When I say automatic, I mean that you don't have to file a different extension form, but you do need to make sure you file with an expat-focused firm or tax software because there is a statement that you have to include with your return to say that you're an overseas taxpayer. Now, if you can't make it by June 15th, you can file an extension form 4868 by June 17th for the extension deadline to October 15th. And if you cannot make the October 15th deadline, and this is more common for those with foreign companies that are waiting for their foreign financials, you will have to not handwrite, but you have to handwrite a letter to the IRS and send it by October 15th to say, I need more time. Signed, sincerely, your expat filer. And you have to, send that by snail mail to the IRS to try to get an extension to December 15th, 2024. So those are the general deadlines. And obviously, if you haven't been filing taxes, stay with me. We'll get about how to make sure that you file your back taxes in a compliant way. So before I jump into that though, just as you're filing your US taxes, as you're thinking about, will I do this myself? Will I use a tax software? Will I use a tax firm? At the end, whatever you choose is obviously what you choose, but you should understand what forms you need to include in your US tax return. So this is the most common tax form. There's obviously a lot more, but these are forms that you should be looking for in your tax return to understand what you are filing to the IRS. So it's going to be Form 1040 and the additional schedules attached to it. That just tells you how much income you're reporting, what deductions you're taking, what credits you're taking, how much you owe, how much is your refund. So 1040 is basically the summary, right? If you're looking to claim the child tax credits, which we'll explain shortly, you're looking to have Form 8812 in your return. If you're looking to claim the foreign earned income exclusion, that's Form 2555. If you're looking for the foreign tax credit, that's Form 1116. If you're looking to claim a tax tree benefit, 8833. And of course, like I said, there's going to be these additional forms, FBAR and FATCA, Form 8938, which are possibly also included with your tax return if you meet those filing thresholds for your foreign financial accounts. Very confusing, I know, but we'll break it all down for you, don't worry. So as I alluded to, there are expat tax benefits, right? I said Form 2555, Form 1116, Form 8833. What does that even mean? This is what it means. It means you don't actually get double taxed. It's very rare to have double taxation. It does happen in certain instances. So, if you're a high earner and you have a lot of investment income, it can happen in the form of net investment income tax. And I know there's a lot of controversy going around there right now, but at the moment, it is still possible to get double taxed there. If you have a company and you have, guilty income, if you don't know what that means, don't worry about it. It's then irrelevant for you. But if you have that, that's another possibility to get double taxation. But otherwise, most US taxpayers that are living abroad will not get double taxed because of these 3 expat tax benefits. So there's a foreign earned income exclusion, Form 2555, where you can exclude, earned income, foreign earned income. So up to $120,000 in tax year 2023. If you have a lot of housing expenses abroad, such as rent, it can even be more. But again, the most important thing to remember about this is it's only for foreign earned income. Earned income means salary, self-employment, or active partnership income. Foreign means that it was earned while physically working abroad. So if you are working for a foreign company, if you're working for an Australian company, you're living in Australia, and then Australia sends you to the US for a month on a business trip because you're a US citizen and you don't have any visa issues going to the US, well, guess what? That 1 month that you worked in the US, your daily income that you earned from that Australian company into your Australian bank account in Australian dollars, that is considered your US source income, and you cannot exclude that on the foreign earned income exclusion. So foreign earned income exclusion is very great for those living in low tax countries, right? Or not paying tax, such as those working in international organizations. It can be very complicated to use if you moved abroad in the middle of the year or you have a lot of US travel. And if you do use it, just keep in mind that it does limit some of your abilities to get a tax refund from the child tax credit. And if you are contributing to your IRA from abroad, it can limit how much you can contribute. Now, another tax benefit, the one we actually prefer to use if we can, is the foreign tax credit, and that's Form 1116. It basically means whatever income tax you pay abroad, you can use on your US tax return as a credit. It gets very complex to use because 1116 has different buckets of income: passive, general, foreign branch. You see the 8 check boxes at the top of the form. What that means is you cannot use your taxes paid on your foreign salary then on your foreign interest, because that's 2 different buckets of income. So there's a lot of math involved. However, it's great because you accumulate carryover credits for the next 10 years. So say you're looking to retire soon, you pay a lot of taxes on your foreign salary in Germany, but once you retire, you're not going to pay that much tax on your pension income. It's amazing because you can build up foreign tax credit carryovers for 10 years. And then once you retire and you're paying lower taxes on your German pension, you can use the taxes paid on your foreign salary for the last 10 years on your foreign pension. So that's why we like the foreign tax credit approach. It also allows you to get the additional child tax credit refunds if you're eligible for it. And if you're contributing to your IRA, it allows you to have enough taxable compensation to contribute, keeping in mind there's other limitations to contribute to an IRA. So, make sure you know if you contribute or not. And then the last one is the tax treaty approach. What happens if your income is pension income, you don't pay any taxes on it, right? Or Social Security income. What happens if you have Social Security income from abroad? It's not earned income, you can't use the foreign earned income exclusion. You pay no taxes on it, you can't use the foreign taxes approach. Guess what? That's what the tax treaty benefit comes in. A lot of tax treaties will say Social Security is only taxable either by the payer or by the resident's country, and so it will actually specify which country has the taxing right on this income. That's a lot of information. Let's talk about how to catch up. So if you're sitting here and you're terrified of all the information I just said, I'm so sorry, right? There's no need to be terrified. It all sounds complex in the beginning, but I promise you, with our help from MyExpatTaxes, by just jumping into it, you will get through it. You can get compliant, and you can do it with streamlining. So streamlining is basically an amnesty program that the IRS has set up for US taxpayers living abroad, even if you haven't filed for 30 years, for 10 years, whatever, you only need 3 back years of federal return. So that makes it to be 2020 to 2022 for this year. And you only need 6 back years of FBARs. Again, this foreign bank and financial account report, which we get to towards the end. But basically, it's a limited scope. You don't have to file back 30 years. You only have to meet this filing requirement. 3 back years of federal taxes, 6 back years of FBARs, and then obviously your current year returns. And what is the most important thing right now that you need to remember is if you haven't been filing, you're probably due a refund. Yes, because in 2021 and 2022, for those tax returns, there were the stimulus payments. And let's talk about the stimulus payments. Because of COVID and the pandemic, I know it's been like 4 years since then, but because of obviously the shakeup to the world, the US government offered stimulus payments to all US taxpayers with a valid Social Security number. And it was paid out in 3 rounds. So you can see it on the screen. I won't repeat all of it, but basically, if you haven't filed your 2020 or 2021 tax return, you're potentially leaving $3,200 on the table. And so what you have to do to claim these stimulus payments is to file a 2020 return and a 2021 return. And that you can do via the streamlining procedure. Now, this is why it's so relevant now to take action if you haven't been streamlining, because there's a 3-year refund window. And it says, basically, you only have 3 years from the due date of your return, including extensions, to claim a refund. The due date for your 2020 return that had round 1 and round 2 stimulus payments, right? So that was $1,800 for a single taxpayer of a refund. That return was due June 15th, 2020. So now, that return was due June 15, 2021, because it's always a year, because otherwise then we're way past the window, right? But it was due June 15, 2021. And so 3 years from then is June 15, 2024. It's coming up. That is the final date for you to try to submit a claim of a refund for your 2020 stimulus payments. I do highly recommend you do not wait to the last minute, because when you're filing Streamline, it can take a little bit longer because you're filing 4 years at once. You have to paper mail your 2020 to 2022 tax returns. So you also want to give enough time to make sure you can get to the post office, get it postmarked, get it sent to the IRS in time. So if anything, make sure to file Streamlining no later than May to ensure that you are meeting the June 15th, 2024 deadline. Now, there's also another nice surprise. If you're a US parent, if you have children under the age of 17 with a valid Social Security number during 2020 to 2023, and you're living in a high income tax country, like basically any country in the EU, you're probably gonna get even more refunds, like thousands of dollars. So this is because of the child tax credit and the stimulus payments combined. There's a lot of information on the text, right? The main thing to note is if you have a child with a valid Social Security number under the age of 17 and you are earning, wages in Germany and you pay a high income tax rate so you can use the foreign tax credit approach, you're probably gonna get a refund of $1,600 per child on your 2023 tax return. And those amounts were also available in the prior years. So basically, for those that have never filed and they file Streamlining and they have children, they might be getting upwards of like $10,000 in tax refunds. I've seen it before, and it's a great feeling that someone so scared to file a tax return comes in and realizes that they actually get so much money from the US government, for filing their US tax returns and being compliant. So if you do have children and you haven't gotten Social Security numbers for them yet, it's not too late. It's too late for the prior years, but it's not too late for 2023. Just make sure you file an extension for your 2023 tax return and get on getting them a Social Security number ASAP. And If you're thinking, I've been filing tax returns and I haven't seen this child tax credit refund, even though everything you said applies to me, I have children under the age of 17, they have social security numbers, I have foreign wages, I live in a high income tax country, look at your prior year tax returns. Is 2555 included? If it is, that disqualified you. So you can always amend your tax returns to use the foreign tax credit approach, which we can of course help with, and still try to get your prior year refunds. That was pretty much the end of the US tax portion. Let's jump into the FBAR portion. Exciting stuff, right? No, I'm just kidding. I know it's not that exciting, but hopefully I'm helping it be a little bit more digestible. So FATCA is probably something you've heard of, in international news as well. If you're a US American, you open a bank account in France, I guarantee you're gonna have like a stack of papers to file, you're gonna have a lot of eye rolls, and they're basically like, we don't wanna help you Americans. It's because of FATCA, and that is a double reporting requirement that your financial institution has to report all of your assets as a US citizen to the US Treasury, and you also have to do this on two forms. There's the FBAR, so if your combined max balances of all your foreign financial accounts, so bank accounts, pension accounts, brokerage accounts, life insurance accounts with cash values, et cetera, if the combined max values of all accounts is over $10,000 US, you have to file an FBAR. Form 114, filed to the US Treasury, not included with your US tax return. If the combined max balances of all these foreign financial accounts is over $200,000 US, you also have to file the FATCA form, Form 8938, that is included in your US tax return, which is basically the FBAR, but with just a lot more questions attached to it. And if you're filing jointly, the $200,000 threshold is doubled. The FBAR threshold is not doubled though. That's always $10,000 US, and each taxpayer is technically responsible to file their own FBAR, unless obviously one taxpayer's FBAR covers all accounts and the other taxpayer does not have any separate accounts. We help you sort this out in MyExpatTaxes. You can file your FBAR with MyExpatTaxes. You just enter, your max values of your foreign financial accounts, and we determine, do you have to file an FBAR? Does your spouse have to file an FBAR? Do dependents have to file an FBAR? Do you have to also file the FATCA form? And we just kind of make sure it all goes to the right place, because it is confusing, right? Now, how do you calculate your max value? Because no bank is going to tell you, hey, your max value in this account on, October 7th at 5 a.m. was $30,000. No one tells you that, right? So you're looking at monthly statements, you're doing a running balance on Excel, right, if you're savvy. But basically what you do is you ignore all US accounts. If it has a US address, ignore it, right? Even if it's an online account. A lot of questions come, I have a WISE account, but it's like a US WISE account with a US address. That's not a foreign account. But if you have a WISE UK account and it has a UK account, yeah, that's a foreign account. So ignore all US accounts, focus only on foreign accounts, calculate the maximum value, not the ending. And yes, I know you transferred 10K from account 1 to account 2. Aren't you just double counting? Yes, but that's the instructions. So you double count. So if account 1 had 10K at one point and then account 2 had the same 10K, well, guess what? The max value of account 1 and account 2 is both 10K. But you get the point. You add up all the maximum balances of your accounts, you add it together, you convert it to USD, depending on the treasury rate for the end of the year. If it's over $10,000 US, you gotta file an FBAR. And when you gotta file an FBAR, you have to include every single foreign account on it, not just the accounts that exceed $10,000, every single one, even if there's a zero balance, even if there's a negative balance, right? So every single foreign financial account is on your FBAR if you have to file it. I lied. There's still a little bit more about US taxes, but let me just breeze through this because we gotta leave some time for questions as well, right? If you are filing your 2023 tax return, just some things to know for this year. The standard deduction has increased because of inflation, right? Tax brackets are increasing even though the tax rates are the same. So basically all good news for you. The annual foreign income exclusion also jumped to 120K for this year. So again, because of inflation and the amazing thing is the additional child tax credit continues to increase. So it used to only be a refundable amount of $1,400 every single year per child. Now it's increased last year from $1,500 to this year $1,600. So, I know the inflation hit us all hard, but at least the IRS has acknowledged that. Now, a couple other things is if you're contributing to your IRA, that has also increased. You can contribute a little bit more. Again, keep in mind, there are a lot of restrictions to contributing to an IRA, especially Roth IRAs. So make sure you know if you're eligible to contribute or not. Now, MyExpatTaxes will basically tell you right away if your contributions are in access or not. But hopefully, before you contribute. There's a couple other exceptions if you're pulling out from your retirement accounts. But just remember, if you pull out early from U.S. retirement accounts, you will be hit with a 10% penalty unless you have a valid reason, as they list in their exceptions. There is a lot of new clean vehicle credits, but those are mostly only available to U.S. taxpayers living in the U.S. And again, I gotta mention it again. This is the final year to claim all 3 stimulus payments. If you do not file your 2020 tax return in time, so if you don't make sure that it is postmarked sent to the IRS by June 15, 2024, and the IRS even accepts that it's been postmarked by that date, you are leaving $1,800 on the table. That's way more than we charge for streamlining to even get tax compliant, right? So remember that, super important. And if you need help, right? If the information I told you was okay, but you definitely need a little bit more, of course you can try MyExpatTaxes, where you'll work with me, you'll work with our other tax professionals. You can do it yourself. You can work with a tax professional to do it together, right? Where a tax professional can work with you throughout. So we have different tiers, but basically you're not alone in this journey. Remember, I'm just like you. I was in this position. And that's why we created MyExpatTaxes, to be a tax solution, one-stop shop for all U.S. taxpayers living abroad, right? So I hope it helps. And yeah, again, if I don't get to your questions in the next portion for the live Q&A, we have a Facebook group that you can join. It's a very chatty group. I think you'll find it quite amusing. You can also always email us at team@myexpattaxes.com. We have a chat box on myexpattaxes.com as well. We are basically always here for your questions, and we'll do the best we can to help you. So with that being said, let's get to what questions you have. I hope you found this webinar helpful.